Hi, I'm Tony from Poolz. If you're thinking about financing your new swimming pool, the two most common options that homeowners opt for are adding the pool onto your mortgage. Now that's a great option if you have enough equity in your property to do that. The other option, which is probably more common, is that people take out an unsecured personal loan. Now there's two really different types of unsecured personal loans on the market today. 95% of them fall into what's called a risk-based loan, okay? And that is where you'll typically see that the interest rate has a little word in front of it, which is really important, which is from. What that means is they'll attract you with a low interest rate, let's call it 7.5% or something for an unsecured personal loan. And in reality, when you actually make your application, the actual rate you're going to get quoted is going to be based on your credit score. Now, if you're one of the lucky people that has a credit score in the top 5 or 10% of the country, then you're likely to get a rate that is somewhere between that 7.5 from number that they quote up to about 9%. But if you're not in that top echelon of credit score people in the country, then the rate you're going to get quoted is going to be based on what they perceive your creditworthiness risk to be. And you're now going to be somewhere between 12 all the way up to 19%. That is what most unsecured personal loans are doing. And you'll notice that those loans typically also have a shorter term of around up to 7 years. On the flip side, the service that we're providing with our finance partner is not risk-based pricing. It's the same interest rates for everyone, so it's much fairer. You either get accepted or you get denied. That's it. There's no different rates for different people. The other thing that's important about the service that we're offering is that we have a much higher amount that you can borrow. So the ones I mentioned before, typically you can't borrow more than about 70 or 80,000 under those scenarios. Whereas the partner that we've chosen, you can borrow 100, even up to 150,000, and you're going to get it up to a 10-year term, which makes that loan more affordable. So not only is the rate substantially lower, which is obviously going to save you a lot of money, but you get a longer term, okay? And it is a much more manageable loan to take out. So when you're looking at pool finance, if you're going down the path of an unsecured personal loan, look into how the interest rate is calculated and what type of loan it is, because they are not all created equal. Hope that helps. Thanks.